Are you planning to buy your first home in Canada? Not sure where to start? How much down payment you need? How to get qualified for your mortgage? What are the incentives available from Government of Canada for first-time home buyers? If you have all those questions in your mind, do watch this video till the end. Hello friends, my name is Mandeep Tesi and we are coming up with another video educating our client in their journey of buying their first dream home in Canada. The first and the foremost thing is the planning. So this means, are you qualified to buy your first home? So you need to get your qualification first. Let's say assume that you have already a permanent resident here. The first and the foremost thing that will be the most crucial factor is, do you have the down payment? Down payment means it's a minimum amount that you need to put when you are buying your first home. For example, as per Canadian, they have this sliding scale, which means if you're buying a property from 0 to $500,000, you need to put 5% from your own pocket. So this is around 25,000. And if your property is from the range of $500,000 to $1 million, you need to put 10% for that remaining amount. Obviously, if you have so much savings that you want to buy a property more than $1 million, you need to do flat 20%. Now you cross the hurdle, you saved, you worked hard for the down payment, you have those funds available. What next? You need to consider how much mortgage you can qualify for. Down payment is one factor of it. There are insider things that you need to be good with. The first thing is your credit history. You need to establish yourself in Canada that lenders trust you, that okay, if we lend money to this person, he will be able to pay us back. For example, you had student loan, line of credit, car loan, or any kind of credit card. If you're paying those payments on time and you're not using that above, for example, 35% of its value, your credit score will be good. So you need to talk to your mortgage advisor first. What is the minimum criteria for a good credit score? Keep an eye on your credit score, monitor it regularly to monitor organizations which are valid in Canada, TransUnion and Equifax. Another important factor is your steady income. So this means you need to have an income flowing into your account which justify the lender, okay, credit is good, down payment is there, this person is earning a good income and they can pay us monthly a principal and interest when you loan for the home. So that will be your qualification criteria to get your mortgage pre-approval. Don't get confused. It's okay. What you need to do is sit with a professional mortgage advisor or talk to our team. We can help you in organizing that. These three important factors: your down payment, your credit score, and how much you can qualify based on income. Let's have that one-to-one meeting set up and that hurdle is crossed. But okay, mortgage is pre-approved, you're already approved for let's say 800,000. What next? You need to consider on your journey to buy your home. Next, you need to understand what is the incentive available from Government of Canada. The first one is RRSP Home Buyers Plan. With this plan, you can borrow up to 35,000 tax-free from your RRSP to fund your down payment. What happens is each year you have a limit based on your income. Let's say you have an income of 100,000 that is calculated on your base salary that you can contribute to your RRSP account, where you can get a benefit as a tax deductible on your salary, which is a benefit because you're on higher tax slab. Your tax slab will reduce and further you're saving for your first home. So this is the benefit available, which is called RRSP Home Buyers Plan. Next we have is land transfer tax rebate. So what land transfer tax is a major expense when you're buying your home. So it ranges from around 0.5% to 2% of the purchase price. So this is the cost that you need to pay while you're registering, basically transferring the title of the property on your name to the government to do all those transfer process. For example, in Ontario, it's around 4,000 rebate, you being as first-time home buyers. Another one is first-time home buyers tax credit. In the recent federal budget, maximum limit the tax rebate available for first-time home buyers based on your closing cost, max up to 10,000, you can get a tax benefit of $1,500. Now you know all the incentives available from the government that you need to utilize. There are terms and conditions associated, so that's why I say always work with a professional who knows what is happening behind the scene rather than just trusting the Google or your friends and family. Another bonus tip for you: in case you're doing less than 20% down for the purchase of your first home, that is purchase less than $1 million, you have to get mortgage default insurance. So there are different organizations which are providing that. Most prominent one is CMSC. So what happens is that mortgage amount, it will be added to the total purchase price of the property and that'll be you have to pay every month as a part of installment, and you need to pay in case you sell that property. There'll be zero you'll be getting because it's insurance that is tied to that property itself. Just to summarize what we went through the journey, it's just a roadmap, it's just a plan which prep you for your first home. But I always talk, you need to work with a professional who can hold you and guide you through this journey, because it's very easy, very smooth, provided you are in touch with the right person. Do contact our team, we'll be more than happy to help. Links are given in the bio where you can book one-to-one consultation with our team. Thank you, friend. Thanks for watching our video. Don't forget to press the like button and share with your friends and family who are on the journey of buying their first dream home in Canada.